Welcome to the Remarkable Retail Podcast, Season 7, Episode 12. I'm Michael LeBlanc.
And I'm Steve Dennis.
We have for our listeners today a special solo episode, a preview of Leaders Leap, your new book currently available for pre-sale on shelves in March 2024. Steve, I'm sure since you announced your latest book, I'd be confident that the number one question you're getting is, what's it all about?
You know, I'm still trying to figure that out. No. It is really fundamentally about why most transformations seem to fail, or at least not deliver the results that leaders want. And I propose a different way of thinking about it, which goes beyond strategy, because there's lots of books about strategy. Really try to dig into kind of the courageous leadership part, which is kind of why the leap is there, is to really think about being a bit bolder and seeing things maybe in a different way than the typical way that people have thought about transformation over quite a long time, actually.
All right. Well, this episode won't be a detailed chapter by chapter, but it's kind of going to help answer that question at this point with many months until release. A little bit about what's it about. So we'll get back to that, or we'll get to that a little later in the episode. First of all, the news. Amazon, blockbuster earnings. I saw some pretty big numbers in this release. I guess, Steve, it turns out when you focus on making money in that business, good things happen.
Yeah, they, as many people may remember, Amazon had a pretty tough 2022, losing money throughout that year, but they are definitely on a better trajectory. Not only did they beat Wall Street expectations, but just objectively, the numbers were very strong. Strong top-line growth, dramatic improvement in earnings. I think their profitability was like 3 times the profitability from the quarter last year. Pretty much every sector doing considerably better. One of the interesting things, and this is probably a topic for another day, is just how much more of a service company Amazon is becoming versus products. You know, typically the shorthand is Amazon, the online retailer. Well, as people know, Amazon Web Services is huge and growing quickly, but the advertising business, all the subscription services, et cetera, et cetera, et cetera. So very strong growth in services overall. The product part of the business was up about 6%, which is better than many of the comparable retailers, but not exactly blockbuster. One of the things that really helped beyond the nice top line growth is they got a lot of cost leverage. You know, they're doing their own year of living efficiently. Their overall headcount,
and that's something Bezos had always said. I mean, even going back, like decades, Bezos has said, "Listen, when we turn our minds to making cash, this thing will generate a lot of cash." But their focus was growth at the expense of cash. But trust me, when I turn our minds to it, we're going to make a lot of money.
Yeah, they got it both through, I mean, you know, when you have, I think 13% or something was their overall sales growth, but your head count is down 3%. You know, they definitely leveraged their SG&A. As other people or some of the listeners may remember, they pulled back on a lot of their investment in fulfillment capacity and have been changing some things around to be more efficient there, get products to customers faster. So they got some leverage in that as well. I still think the two big headlines really don't have that much to do with retail directly, which is the AWS growth was quite a bit slower, still very profitable, but slower than some of the direct competitors. And the ads business was up quite dramatically, I think about 23%, if I remember, or maybe 26%. Wow. And of course, that's got, 80% gross margin or something. So when you look at the contribution to improve profitability, AWS certainly a good contributor, but I think the continued growth of the very high margin ads business is really a big explanation for the turnaround on top of the cost leverage.
Yeah, what do you call it? Value engineering. I mean, you've really built a retail business to sell media when you start to look at some of these numbers.
Yep.
All right. Well, let's take a walk over to the wobbly unicorn segment of the show, the disruptor reset continues, which thinking back was one of your predictions for the year. So lots of news in this segment in the Wobbly Unicorn area. Let's start out with Dollar Shave Club, which I was a big fan of for a while, and then they had their liquidity moment, and now they've got a de-liquidity moment, I guess.
Yeah. Well, yes, Unilever bought Dollar Shave Club, I think about 7 years ago now, for quite a hefty price.
It's like $1 billion.
Yeah, I think over $1 billion.
Oh, jeez.
And so unicorn level acquisition. And I had been hearing for the last couple of years, just like we've seen with a lot of these disruptor brands, that the performance wasn't so great, basically that it was hemorrhaging cash. I can't exactly confirm that, but I doubt if it was a strong performer, Unilever would be unloading it. So they're selling it to a PE firm. We don't know the price they paid, but I'm guessing quite a bit less than $1 billion. And they'll still retain a 35% share. So part of the, we'll get into a recap of or a grading, I guess, of my predictions in December, but this is definitely one that's going to be on the list in terms of consolidation, spin-outs, that kind of stuff.
And I got to think, my own personal experience was I was a member heading into COVID, and then I'm like, well, I'm just shaving a whole lot less, so I canceled my membership. So I think events transpired against them as well as just their structure. I think
right,
work from home, or structure change and work from home. All right, let's talk about Farfetch. So big name, big dollars, but.
Yeah, this is, I think the last time we talked about Farfetch was over a year ago when they did this deal with my old employer, Neiman Marcus, to host some of their online activities. But Farfetch has been one of the earlier luxury online shopping platforms. They're more of a marketplace in terms of their original business design, but they've also been quite active in some acquisitions, partnerships, like I mentioned, with the Neiman Marcus deal. They're quite large. They've about, given that they're pretty focused as a luxury fashion player, they're about $4 billion in GMV. Their sales have been pretty flat for the last year. We'll talk about some other luxury stats in a minute, but they've swung to a pretty significant loss, forecasting some improvement, but the overall operating performance has not been great. But two pieces of news. One is, as a business, it's a very wobbly decacorn, I think we could say, because at one point, decacorn, that's a $10 billion valuation. They achieved over a $10 billion valuation late in 2020. Yeah. Since then, it's been pretty much a roller coaster ride down. They have lost 97% of their value. But I guess their Hail Mary play here is they're going to merge with their main competitor, which is Yoox Net-a-Porter. And Yoox Net-a-Porter is a merger that happened several years ago between Yoox, which is a separate company, and Net-a-Porter, which was also one of the fashion unicorns. So anyway, that deal just got EU approval. And so we'll see if putting together several struggling brands will turn out to be a magical formula. But tough times all around, but definitely more of this consolidation we seem to be seeing to try to turn things around.
I also noticed in similar news, Unconditional Love, the company behind Hello Bello, founded in 2019 by actress Kristen Bell and Dax Shepard, great actors. They became like the largest direct-to-consumer diaper brand by 2021. Turns out that's a pretty shit business.
Oof. Ouch.
Boom, boom.
Ouch.
There we go. Look, hold on a sec. I gotta. There we go.
Thank you.
There we go. Sorry, I couldn't resist that one. So, just
maybe we can flush that during the editing process.
Let's shift our thinking now to the luxury segment. By the way, very popular episode last week with leadership from LVMH, but they're seeing in the category, and we touched on it a little bit, a slowdown, and we got a couple of examples of some slowdowns, and then one that's not so slowdowny. Talk about that.
Yeah, it's kind of a mixed picture. I mean, certainly think the overall perspective is that luxury is slowing, but as we talked about with Anish Melwani from LVMH last week, some of that is comparing to unusually strong numbers. So you kind of have to take the longer view to really understand it. It's not like things are falling apart. But LVMH's main competitor, the Kering Group, which is most known probably for Gucci, but they have a number of other brands as part of their portfolio. They reported a 13% drop in revenue. So that's among the poorest performances we've seen from luxury players. It does compare to a pretty good number last year. Yeah, but still, that's quite weak performance. Canada Goose, we've had Carrie Baker on the podcast. They've alluded to slowing in their business, pretty considerable slowing, and some real weakness in China. They haven't reported their quarter. I think they will next week, but they've definitely signaled a pretty concerning slowdown, which has hit their stock. But on the other hand, Hermes had a very strong quarter. Their sales were up, I think, about 14%. So it's really interesting. I think some of the explanation is Hermes is so high end, beautifully run company, but so high end that I think for the most part their customer is not very affected by economic headwinds. Whereas you start to get into Canada Goose and Keurig and LVMH, you've got a mix. You get some very, very high end. You have stuff that's more kind of accessible luxury, aspirational luxury, and that's probably the weaker part. And then some of it is also the exposure to China, which continues to be a little bit weak for many of these players.
We saw some news coming out of Korn Ferry in North America that we don't seem to be going in the right direction around DE&I in terms of women in retail CEO positions. What did you make of the news?
This was very disappointing to hear. I hadn't really focused on this, but John Long, who is the retail sector lead for Korn Ferry North America, I actually have known John for a number of years. He lives here in Dallas, as I do. The report from John and Korn Ferry was that if you look at the past 12 months, there have been 39 new retail CEOs. These are big retailer CEOs that have been replaced. And in the process of these replacements, 6 fewer women were appointed. And that's really a disappointing number, I think, for a bunch of reasons. Not only as time has gone on, there are more and more qualified women just coming up through the ranks. So it's not as
we
if
talked to many of them.
Yeah. So it's not like there's a real shortage of great female leaders. And you would think that this would lead to more CEOs rather than fewer. And also, I think for the most part, retail tends to be more, or most retailers are more, their success is more determined by female customers. So to the extent you want to have leadership that reflects your customer base, you'd also think that would be driving greater rather than fewer. So it's not quite sure what this is about, but certainly in terms of the results, it's not particularly good for diversity.
Well, I know when we were talking about this off mic, we're still committed to our objectives when it comes to our guests, and we'll continue to work hard to fight the tide and be supporters of women in retail leadership roles. So we've got one, in fact, coming up as our next guest. So we'll continue to do what we do. So hopefully some reflection back into the industry. Let's end on a positive note, which is kind of funny. Again, we were talking off mic about how often we start talking about big picture economic stuff, which isn't always positive, but we are actually ending on a positive note. We got some, I don't know, it surprised some people, certainly. I mean, the U.S. economy, I tell you, it takes like Timex, right? Takes a licking, but keeps on ticking.
Yeah, the U.S. GDP, I think it's actually called the advanced GDP, so not the kind of final number for this last quarter, jumped 4.9%, which is just, if you look historically, a very strong number, but it is the most since the last quarter of 2021. And half of that growth came from consumer spending. So this ties in a bit with the numbers we talked about last week in terms of monthly retail sales. And it's also just interesting because there is this narrative, which I guess is largely driven by politics, that the U.S. economy is really in trouble. But when you look at this number, you look at the low unemployment rate, you look at inflation coming down, it's really very, very strong.
True. Right.
Yeah. And the other commentary that was part of the story I read comes from a comment that the Treasury Department made, which says that unlike other advanced economies, the U.S. is on track this year to return to reach the level that would have been predicted by the pre-pandemic trend. So as we see certainly improvements in many, many economies, the U.S. is definitely quite a bit ahead of most of the economies we would think is kind of competing or similarly advanced kind of economies. So yeah, great momentum going into I guess we're in the fourth quarter, but going into the holiday season and perhaps next year.
And touching on Europe, the European Central Bank is also ending a string of rate cuts. So that signals positive things in Europe, which, they got a war going on over there. So that's very, very positive news, actually.
Yeah, so as much as we focus on some of the headwinds, and there are definitely some to watch out for, the momentum continues to be really surprisingly strong, because just about everybody was, I think there was a sense that this was going to be a good number, but this is really a great number when you look at it stepping back.
All right, well, that's the news of the week. Now let's get to the back half of our episode, which is a bit of an introduction to your new book, Leaders Leap. Let's start at the beginning. Give us a bit of an introduction. I mean, you start the book with a personal story. I've got an advanced copy that I've had an opportunity to read through, and it's a great story because you come to realize through this particular experience that, notwithstanding a tremendous amount of great work and a great team, that you're crafting a turnaround retail strategy, but you had this epiphany that there was no real hope of success. Was that? I want to, if you could share a little bit about that, and was that the genesis of this book, or a beginning of a journey of self-discovery, and eventually this book as you thought about it over the past number of years?
Well, to answer your last question, yes or no, yes and no, but I'll come back to that in a second. Yeah, the story that I open with is from over 20 years ago. I was the head of strategy, which I always say is an oxymoron, being the head of strategy at Sears. And one of the things that my team was tasked with was helping to try to revitalize, turn around, whatever you want to call it, the declining Sears mall business, basically the department store business. And we spent 18 plus months doing all sorts of analysis, worked with a big consulting firm, had all these
doing
task
the
forces.
Work, as you like to say, doing the work, right? Doing the heavy
turning
work.
over kind of every rock in terms of looking at the competition and store operating model and marketing and private brand consolidation, et cetera, et cetera, et cetera. Lots and lots of work. And we had acquired Land's End to try to jumpstart our apparel business and home businesses. And so lots of activity. And we eventually presented this big plan to turn things around to our board of directors, and it was going to require quite a lot of capital and many years to execute. And after all this work, and often a very skeptical board, they said yes, that we could go ahead. And the next morning,
you must have felt pretty good about that. I mean, that's a big deal to sell in a big strategy at a board level, right? That's a big
absolutely. No, it was. And certainly all the effort we had put into it. And there was, it's a whole other story about some of the other options we looked at, but we were quite expansive in our thought process, et cetera. Anyway, they endorsed the strategy. And so we could go forward in picking up the pace of implementation. And then the next morning, I was in my office, and one of the guys who works for me came in, and he looked like he had a sour stomach or something. I couldn't quite figure out from his face. I was like, "Hey, what's up, John?" And he said, "I've really been thinking about the strategy that we just got approved, and I really think it's the best we could come up with under the circumstances and what we were allowed to pursue. But the more I think about it, it's not really a strategy to win. It's just a strategy to suck less." And I was kind of like, huh. And at
my
first,
coffee's
I
not
was
even
like,
cold yet.
I know, and I was like, man, like, and he's a bit of a cynical guy, like I am, so I wasn't totally shocked by the take. But I was like, what are you talking about? Like
at first, you must have been like, oh, come on, man, and it sounds like it kind of.
It felt like a little bit of an insult in a way. I mean, I kind of took it personally, which it kind of ridiculous because, hundreds of people had worked on this. It was hardly just our project. But it ended up striking a chord with me because, and for purposes of the book, I had to condense the story a little bit. There's more around it. But basically what he was saying was that we were addressing the gaps that had developed between us and our competition. But there was really nothing we were doing that was really going to take us to a leadership position and, make us remarkable, as I would have talked about in Remarkable Retail. And, that really was a bit of a light bulb moment for me specific to Sears. And then in terms of whether was sort of the formative moment for this book, I say yes and no, because really at that point, 20 years ago, a lot of the disruption that we've seen, so the subtitle of Leaders Leap is Transforming Your Company at the Speed of Disruption. And at that point, there had been a lot of disruption in retail, but most of it was in the physical realm. There really wasn't a strong...
Early days.
It was pretty early. So the retailers that were beating us were mostly like the Home Depots and Best Buys and those sort of retailers, mostly physical retailers. And the Sears story is complicated in terms of what went wrong along the way.
Sure.
So from that standpoint, it was a little bit more of kind of the innovator's dilemma, if people know Clayton Christensen's book, which is, why is it that legacy brands, not just retailers, often have a hard time dealing with new competition. But again, really in that physical realm, as time went on, and later when I was at Neiman Marcus, but even more so in the last 15 years, as the pace of disruption has accelerated, as a lot of that has been driven by changes in consumer behavior, changes in technology, lots of things have gone on to really put some of the best players in the world at one point into bankruptcy, or in many cases into real struggle. So it's been an evolution. It's a long way of saying it's been an evolution for me in my thinking. But I got to the point probably 10 years ago when I really started to talk about this bifurcation and the collapse of the middle, specific to retail. But in this book is not a retail specific book. So I've looked at other industries, and you see this pattern over and over again where once strong companies start to fail, and a lot of discussion about the need to transform. But if you actually study what's going on, and I talk about a bunch of statistics at the beginning of the book, most transformations either fail or fall well short of their objectives. CEOs say all the time they're very nervous and frustrated about their success, the success of their efforts. And so for me, ultimately, the question was, well, why? Why, when we have all this history, why, when we have all these great books and other thought leaders talking about ways to transform? And
very smart people with great experience, right? I'm sure you and the team were Sears is the biggest retailer in the world, one of the biggest companies in the world, like very smart people, right? So, as you say, what's going on?
Right. So I wanted, originally when I started working on the book, I was looking at it much more from, I would say, kind of a semi-academic strategy perspective. And as I did some of my research, I started to say, well, yeah, there are definitely some things that are rooted, I guess you could say, in strategic frameworks, strategic principles. But I also started to say, I think a lot of this really cycles back to leadership mindsets, how leaders see the problem, and how blind spots, confirmation biases, ego, unwillingness to kind of let go of the way they've always done things, how they misperceive risk. There are other factors, almost more kind of Brene Brown courageous leadership sort of factors that intersect with strategy and understanding digital disruption. So it's kind of, for me, it led me into a lot of personal reflection. It led me into more kind of leadership principles, not just a lot of the Blue Ocean Strategy or some of these other strategy books that have been around for a while.
Let's talk about why this book now. I guess in some ways, I guess you've introduced it that you see a lot of these transformations. It's not new that transformations have failed, and we do see entire transformations of economies happening. Is that why you thought this was the right book for the time? And talk about who should read the book and get the most benefit from it.
Well, the why now, I mean, in a way, I wish I had a time machine because a lot of the lessons are things that I wish I had fully appreciated early, not just in the Sears story, but really across the last 20 plus years, things that I have learned where I've made mistakes, where I've seen clients make mistakes, where I've seen other companies make mistakes. Again, most of my focus is outside of retail for this book. And I just fundamentally believe that it is harder and harder to distinguish yourself in the market in most cases, which is, gets to the need to be remarkable. I also think that it's pretty obvious that the pace of change continues to accelerate, most often more exponentially than in a linear fashion. And so if you aren't committed to moving faster, to aiming higher, to acting more boldly, you are likely to fall further and further behind. And I think as we've seen, if we just keep it in the retail context with some of the retailers, I talk about in Remarkable Retail, we've talked about on the podcast, when you get behind, it's often impossible to catch up. So I think there's an incredible degree of urgency for many, many companies that are struggling right now. I know from some of my research and from talking to people that there are a lot of nervous CEOs out there who may not be bearing the full brunt of disruption quite yet. But whether it's AI, the metaverse, new competition, whatever it might be, know that they are not well positioned for the future if they don't start to move more aggressively.
Let's talk a little bit about the structure of the book. You've got 3 parts and 7, what do you call them? Leadership mind leaps. Well, I know which one my favorite is, but it really is a book. I also like the structure where at the end of each chapter you're asking people a bunch of questions to reflect themselves on what you're talking about and from their own context. So just take us through a little bit about the structure of the book and I don't know. Do you have a favorite mind leap? I mean, mine is start with wow. I love that one. Because it's kind of counter narrative to some of the things I do where I I'll just start it and it'll be okay and then I'll get better as I go. And that doesn't maybe work so much anymore. Talk about that a bit.
Sure. Well, maybe we can come back to that specific example. But fundamentally, the introduction where you mentioned the Sears story is really to kind of set up how I came to believe that leaders really do need to leap. They need to leap to kind of higher ground in terms of the value they're delivering to their customers, whether their customers are consumers or whether their customers are business to business or frankly nonprofits. And I think a lot of the advice in the book also is very well suited to smaller businesses. Doesn't have to be a big business, but fundamentally this idea that you've got to leap to higher ground and you have to move much faster. So I kind of set that up as the problem statement, I guess. And then in the first part, and this part is a little bit familiar to listeners in terms of this choice between being remarkable or being irrelevant. So that gets back to what I just said, is if you're not remarkable or moving towards becoming remarkable, you may become extinct or at least become kind of ever struggling. Yeah,
you won't just be okay if you're not. Hey, we'll get through not being remarkable. You're seeing, and you present evidence that no, you could cease to exist. Like this is an urgent thinking that you want to impart on people. Yeah,
I'm really trying to create, I guess people used to say the burning platform or what have you. But I think, we don't have to think that hard, again, whether we're talking about retail or plenty of other industries where the once mighty have fallen. Kodak, Oldsmobile, BlackBerry, Palm, So retail and non-retail, lots of examples of companies that were just absolutely the leaders and very profitable, whether that was 10 years ago, 20 years ago. And again, if you believe that the marketplace demands even more differentiation and value and the pace of change is accelerating, well, then you really need to. So I'm trying to make the case for why it's so important to really approach things in a different way. And then I've alluded to this a little bit in past episodes, this idea of, or this concept that I call the curse of the timid transformation, which is basically when people look at all these shifts and all these factors, and even if you kind of buy into the need to change, a lot of change ends up being quite incremental. And incremental change is important. Business optimization is important. Value engineering is important. Like there's lots of things that need to be done, and they're good ideas. But if you are behind fundamentally and moving too slowly, you're never addressing this transformation gap in a meaningful way. So I try to say, look, what ends up happening most of the time is people sign up for a too timid transformation. And so that really sets up the pivot to the core of the book, the second part, where I get into these leadership mind leaps as to, okay, accept that perhaps your transformation is too timid. Once you accept that, then it's like, okay, now what? What do I do about it? And I try to provide, and this will make more sense when people read the book, but I'm trying to get away from what I'll call kind of the cookbook approach of here is a lot of kind of heavy-handed prescriptive advice. I'm really trying to call people to get a little bit of that, but mostly to see things in a fundamentally different way. And some of that is strategy advice, but a lot of it is to look in the mirror and say that actually as a leader, I'm the problem. I often let my ego get in the way. I often let my ignorance get in the way. And it's not because you're stupid, but it's because you don't dig deep enough to really understand what's going on. You don't let go of the things that have served you in the past that frankly are not serving you very well now and almost certainly won't serve you in the future, and just kind of go from there.
Well, and I mentioned of these leaps, I like to start with wow. Do you have a favorite? Do you have another one you wanted to share, or even talk more about that?
Well, I'll talk a little bit about that, but what I would say is there's in these 7 mind leaps, and the reason I call them mind leaps is really to say that, the mindset that most leaders have is often too fixed. And sometimes, you talk about having a growth mindset versus a fixed mindset, and I think that's a good idea. But I'm saying you need to push even further to really see things in a different way. And like I said, some of those are really more strategy elements, but a lot of them are really more how you see the problem and how you reframe your thinking in a fundamental way. So I don't know that I have a favorite. I think one of the part of what I'm trying to do, not just to do it, but I think to really hopefully get people to challenge their own thinking and approach problems in a different way, is to really go at, as I do in the first mind leap, this idea of crushing your ego. Because I know from my own experience, and I do, unlike Remarkable Retail, I do talk about myself a bit more here in terms of things, mostly things I got wrong. Or probably almost entirely things I got wrong or I wish I had known then, but also examples of other companies. I think, ego gets in the way of a lot of things. It's where we don't ask for help, where we think that somehow we're the source of all knowledge, kind of command and control. We're not vulnerable enough about things we don't understand. So I try to start with that to say, well, maybe as Taylor Swift says, I'm the problem, it's me. Like, accept that perhaps if we don't address our limitations very directly, we're not really in a position to do the next 6 leaps, because you really do have to not kind of be a victim and say, right, I've got a role in this and I need to do things in a fundamentally different way. So that's a little bit of the kind of Brene Brown courageous leadership part. So it's at the intersection between that kind of reframing of leadership values and skills and disciplines with the strategy perspective. Specific to your question about start with wow, this is really when I talk about aiming higher and really being remarkable and really differentiating your business in a fundamentally different way. I do think the tendency is to look at what we've always done and do it a little bit better. If we go back to my Sears example, we were very rooted in our starting point and saying, okay, well, how do we line up against Home Depot? How do we line up against Kohl's or whoever we might have been focused on from a competitive perspective? And what are the key decision criteria for customers? It's, location, value, whatever, product. And again, those are all decent things to do.
Sure.
But, a lot of times you're just playing catch up, or you're just eliminating a deficiency. And so it gets back to this just sucking less, right? You're closing the gap,
right,
but you're not really moving to a whole new level. And the other problem is you close the gap, and by the time you close the gap, the competition has gone to the next level.
Right. You're not the only bunch of smart folks working on difficult issues. There's, it's a very dynamic environment with people you've never heard of and people you have heard of working on similar challenges, right?
Yeah. So the Start with Wow idea is a bit about this aiming higher in terms of the value you deliver, but it's also just recognizing that we live in a very noisy world. So even standing out in a world of social media distraction, I think probably everybody listening to this podcast can relate to just how busy we are and how many marketing messages there are, and just the sheer, whether you're talking about staying in a hotel or picking a restaurant or shopping, there's so many choices and it's so easy to access them or get information about them. So if you can't really give the customer something to talk about that's really powerfully relevant and very differentiated, that wow factor or a series of wow factors, there's a very good chance you don't even get noticed in the first place. And if you can't get noticed, then there's really no opportunity to sell the customer something and build that relationship that's going to be enduring. So I think the Start with Wow is kind of important on this. Mm-hmm. How do you break out of the mediocre middle and create sustainable value?
Well, it is a great book, and like I said, I've had the privilege of having a chance to read an early copy of it. So when can everyone else get their hands on a copy? This is available for pre-sale now, and it's March, right? Mid-March that the book will be on the shelves.
Yeah, it's available for pre-order. So if you order it from Amazon or some other places, it will show up the day of release. The day of release in most markets is March 12th. Mm-hmm. Some of the international markets, it's a week or two later. So there's a little bit of time, but I hope people will check it out. The other thing too, which I should probably mention, it's a little bit of a difference just quickly between Remarkable Retail. So Remarkable Retail, I started working on because I was talking to clients about some of the ideas, and I was speaking about Remarkable Retail, 7 or 8 years ago. So I've been working and playing around with those ideas and kind of test driving some of the concepts before I sat down to write it. This book has been a little bit more of a journey of kind of evolution, because I started as in a bit more theoretical place, and then I decided that not both because of the way I wanted to write it, which included bringing more of my personal journey into it, but also because I wanted to make it more inspirational than prescriptive. So it evolved from the place it started 18 months or so ago, and I haven't really spoken about it much in public. So I've got a new keynote that I'll be starting to deliver early next year. So if there's any interest in folks bringing me in to talk about that, whether it's an internal kind of thing or more a public event, please let me know, because I'm starting to look at booking those things for next year.
All right. Next year is almost already upon us. Well, listen, let's leave it there. I'm no doubt we'll be talking about it more, particularly around the launch, and you'll be talking about it more. And as you said, you'll be talking about it more in the context of your speaking opportunities and meeting with folks. But as I said, let's leave it there for this episode, and we'll get back next week. If you like what you heard, please follow us on Apple, Spotify, or your favorite podcast platform so you can catch up with all our great episodes, including renowned author, entrepreneur, and leadership teacher Seth Godin, talking about his incredibly timely and urgent book, The Song of Significance, a new manifesto for teams. And be sure and drop us that 5-star review where you listen to your podcasts. It really helps us spread the word.
And I'm Steve Dennis, strategy and innovation consultant, keynote speaker, and author of the best-selling book, Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. You can learn more about me at stephenpdennis.com, and be sure to follow me on LinkedIn, Twitter, Threads, and Instagram.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker, producer, and host of a series of retail trade podcasts, including this one. You can learn more about me on LinkedIn. Safe travels, everybody.